Okay, guys, so we have a potential short sell position for the US dollar against the Norwegian Krone, which is now firmly moving to the downside as we have an uptick in oil prices. Now, just remember, there's two factors affecting this exchange rate. At the beginning of the year, the oil price got extremely weak, and that really did weaken the Norwegian Krone, which is Norway's key export is oil. If we have a look, traders, we can see that when we looked at crude oil at the beginning of the year, we saw a heavy sell-off in the early parts of 2020, and that's what greatly affected the Norwegian krone to weaken against the US dollar. And if we have a look at Norway's key exports, petroleum, gas, and crude oil make up over 50% of their exports, including refined petroleum as well. So that has a big impact on the amount of demand for the currency when the major export falls in value. And this is why when oil slumps, the Norwegian krone weakens considerably. Then we had an uptick in oil prices and a strong recovery in the Norwegian krone, which should now continue because oil prices are now breaking to the upside. We've broken above the previous resistance because of this vaccine news, which will improve the demand for oil globally when the global economy has access to this vaccine, because air travel will go back to normal, cars will be back on the road, manufacturing industry will reopen to its full capacity, and oil is a key component to all of the industries I just mentioned and more. So with that being said, should oil continue to climb, we should see the Norwegian krone strengthen further against the US dollar. And remember, the US dollar is getting weaker across the markets at the moment because lower interest rates in the United States, and when the rest of the world is expected to grow at a faster pace or just as fast as the United States, then the dollar weakens because money goes out of the US and into emerging markets and other countries. And that's increasing the rest of world currency reserves for US dollars. And that means the US dollar gets weaker in the exchange rate. So how can we trade this? We have a support level around 8.80. So 8 coronas and 80 cents is a support level. Now, what we can do is if we break below this key support level, we can look to take a short sell position in this currency pair. So if you're looking at a 1 month ATR, so the volatility of this exchange rate over a 1 month period is usually historically around 6%. So if we wait for a break below this level and we enter, say around here, we want around a 6% stop loss, which is around this area around here. And that's giving us the fluctuation, giving the market the room it needs to fluctuate on a monthly basis in the markets. And you can clearly see here, when we're trending, you get pullbacks around that much and again around that much. So you need to have that stop loss, giving that volatility the breathing room it needs in the market. So that's a really good trade, looking at the US dollar against the Norwegian krone. Thank you for watching.